All right. Hello, everybody. Welcome to the Wednesday, September 10th closing playbook. We're going to get started here with our normal pre-show, just kind of introduction to the platform for people who are new and to what we're going to be doing today in closing playbook. So if this is your first closing playbook, this is a free daily live webinar that we do featuring Graham Lindman and Nathan Tucci. And we normally cover some live trading in the last half hour or so of the market day. It's usually a pretty fast-paced session. So for those that are newer to trading, if you can't keep up and you can't take all the trades that the guys go over, don't worry about it. Just pay attention, learn as much as you can, and build up your experience level. We also go over some education, some trading ideas, maybe recap of the current day, plan for the following day, and sometimes have special guests like we're going to have today. If you're new to the platform, when you get to this closing playbook page, you don't need to log in. You can disregard that login button. You just need to put the name that you want to be known by in the chat in that field there and click join and come on in. In the top left corner of the presentation, you can click on the hamburger menu which is those three lines, to shrink that left green column and give yourself a little bit more space for the presentation. In the bottom left corner of the presentation is the speaker icon. That's your mute and your unmute button. So if you're watching and listening to the presentation and suddenly can't hear us, double check that you didn't accidentally tap on that little mute speaker button there. In the bottom right corner of the presentation, we have two icons that control the size of the presentation. The double arrow button will make it full screen, which will cover the announcements and the chat, but it'll give you the best view of what's going on in the presentation. And the icon next to it is the picture in a picture button. That will shrink the presentation down into a little floating window so that you can do something else in the background, like go to your brokerage account or open up another web page or anything like that. However, picture in a picture is both browser and device dependent. So depending upon what browser and what device you're on, you may not actually have that button. Most people have had the most success with the picture in picture on the Chrome browser. So you can give that a try if you're not using Chrome and you want to do picture in a picture. Lastly, if you want to be able to direct message any of the hosts, you can click on any of our messages in the group chat and then click on the little double speech bubble icon that you see on the slide there. That will open a direct message to any of us so that you can ask a question privately or give us your name or phone number, email, that kind of thing, without telling the whole world about it. We have a page you can go to see past opening and closing playbooks. It's this URL that you see on the screen. This is just a preview of what the page looks like. These are a library of replays that go back to about mid-August. If you want to see replays older than that, you'll have to look in the announcements section below the presentation where we have a bunch of helpful links. So the first link in there is the link you should be using to get to opening and closing playbook every day. The NMC-live link will always take you to the live room. The second link is the one we just looked at with the recent replays. The third one is the link for YouTube where the older replays will be. The fourth link on there is the daily scan, email, and text message. Now, these aren't text alerts on trades, but what they are is a daily email that the New Money Crew sends out. That's Nathan, Graham, and Lance. They send out a daily email. It could be stocks to watch. It could be what's in the news. They also send out some text messages about events that are starting soon, things like that. So it's a good idea. It's totally free. Sign up for that New Money Crew daily scan if you haven't done that already. After that are a couple of Telegram links for Nathan and Graham. That's really the best way to stay in touch with them and everything that is going on. They have some message in Telegram about kind of throughout the day. The next link is $1 Playbook VIP membership. That is a members area that goes along with opening and closing Playbook. It's only $1 for lifetime access, and it includes tutorials, training, online calculators, helpful links. And if you're not a member of any of Nathan or Graham's programs, it's definitely the cheapest way to become a member and get invited to members-only events like we've recently had on the past few Sundays. So It's the best dollar you'll ever spend. If you're not a member of that, you definitely want to do that. Even if you're a member of all their other programs, you want to get in on the Playbook stuff because there's stuff in there that isn't anywhere else in our members area. And then the last 4 links, I won't go into too much detail about, but they're there if you want to learn how to paper trade, which is practicing trading without real money, leveling up your options permissions in your brokerage account, a walkthrough of our members area, and an introduction to our customer service live team. Coming up today on Closing Playbook, Nathan and Graham are not here, and subbing in for them is the wonderful Chris Pulver. He is one of our trading experts in our big group that we have here, and he was a hedge fund manager. He's got years of experience. He's got a bunch of really great and successful programs out there. He's going to be talking to us about trading like a market maker, some of the market guardrails that he wants to make sure you're aware of. Zero DTE, those are options that expire the same day that you trade them. So strategies on zero DTE and some high probability support and resistance. Those are some of the trading concepts he's going to go over today with us as we get into this. So it's 3:31. Let me get Chris onto the stage here. Hello, Mr. Pulver.
Hello, Mr. Mound. How are you? How's everybody?
All right. All right. Let's see who's in the chat here. We got Dan, Cindy Lou, Gina, Joseph. Let's see. Rama, Bob. Lots of people in the chat. So just so you know, on this, we have a little bit of a delay between what we see in the StreamYard platform and what we see in the Wise Pub. So if you ask a question, Chris, and you're waiting for an answer on the chat and you have dead air, it's because there's about a 10 or 15 second delay on the Wise Pub. But yeah, we're good to go here. So CMC, the debit spread class is in pretty much all of Nathan's members area video sections. So if you're a member of any of Nathan's programs, you should be able to find the debit spread class. In the members area, when you're looking at the videos, sometimes you'll see like the first, 3 or 4, and then there's like a little text link that says like see all 10 or see all 6 or however many there are. Sometimes people miss that. There are a lot more videos there than that show up on the main screen. So you may just need to click the see all link in order to see all the videos. But pretty much any of Nathan's members areas should have that debit spread class in there. All right. What's going on in your world today, Chris?
I'm kicking myself for passing up on a trade. I was 2 for 2 today for daily profit play. I had a pending order. I canceled it because I was like, we're right in between a couple of key levels. I had a 65.25 level that I wanted to pin today. And right now that would be, I canceled the trade. So it's not a real trade, but I put it in there. It was trading for around 13 bucks. I was trying to get a little picky on the fill at 14. Right now that trade is trading for $7.30. So even if I took the trade at 13 bucks, it'd be up about $550 right now. So I'm kicking myself because it's right around that 65.25 like I wanted. We're trading at 64.24 live, and there's only the final, 27 minutes in the market. So that's a big fat winner that I did forfeit today. So that's fine. We live and learn. But I did have 2 winners this morning, daily profit play. I hit fresh highs in the portfolio for the year. I was up to a high today around 492. So nearly 500K for the year so far. So I'm just grinding per usual. Enjoying the melt up like everyone else should be, and also being braced for some volatility ahead as we should be. I don't think that the market will continue to grind. I mean, grinding higher, yes, but not necessarily exploding higher. But honestly, man, this market is being so weird with inflation today. It was PPI data. We have CPI tomorrow. We have the Fed next week expecting to cut rates. All this drama. It's the perfect weakness window from September to October, usually the 2 worst months in the market year after year as far as the 10-year history. And yet we're up like almost 3% for September. It's like the market doesn't give a crap about anything other than going up right now. And that's fine. I mean, honestly, like it's great, but it is frustrating to the technical trader that's we're overbought. We've got divergence. We have no volume. We're having, thinning liquidity. And it's time to kind of see these corrections. So it hasn't happened yet. The market has continued to give it. Basically, it has thwarted a rising wedge. It has thwarted a 3 drive pattern. We haven't broken any key structure. One level I want everyone to watch. One thing I want everyone to watch, write this number down on SPX, 6360. Because I said this a couple weeks ago, price will care about corrections when price actually confirms a correction. And that's the key level I think the market has to take out. So we're trading at 65.23. I know there's a big call wall around 6,500, but clearly the market's trying to breach it. We have CPI tomorrow. We've got drama going into the Fed next week on Wednesday. But 63.60 is a key low that if that is taken out, we're likely going to see a correction of at least a couple hundred points. I think we get down to 6,200, maybe 6,100. Even a round number like 6,000, David, would be doable. I don't think that changes the dynamic of the market. I'm still looking to buy the dip. I'm still mostly bullish. I think this whole recession talk and the market's going in a bubble and blah, 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 it's all noise. This whole year has been nothing but noise. Literally, the market's down 20%. It's noise. We pivoted, we're up 30%. We're nearing a recession. The Fed's going to cut rates. It's all noise. Like, the market is built to go higher, and we have a agenda with the Trump administration to be fiscal dominance. And it is about spending money and growing as fast as possible. And we are going to run this economy hot. Trump and company are literally trying to stack the Fed to also have this agenda come to fruition. So stop looking at the bear porn. Stop looking at all the doomsdayers out there that are just calling for all these recessions and all these depressions. The market's going to continue to grind like it normally does. So volatility along the way, some dips and pullbacks along the day. I think those are healthy, but I'm just telling you, it's all noise. So find a strategy, stick to a strategy. You'll be a lot better off for it. Like I've said, I trade every single day, and I've just enjoyed more and more melt-ups. I started to be a little bit more passive through August and September because I was like, all right, it's about that time where maybe we have a pause or a lull or a pullback, and it just hasn't happened. So I've still melted up. I mean, I'm trying to think, in August, my highs were around like 410 or 415. Today they crossed 490. I'm still getting gains. I'm still getting profits, but I'm positioning for way out of the way. I'm positioning for a wide margin for error, as well as grinding each and every day. So,
are you hesitant to take longer out strikes because you think that that's going to turn around, or no?
No, it's a good question, because a lot of times I do kind of position some of my option trades out for certain windows. And so I'm pretty bullish as long as I have a decent margin for error and some percentage forgiveness. I'm pretty bullish through the end of the year. And realistically, I'm pretty bullish through like summer of next year, because if we can survive basically Q1, Q2 next year, I don't think the market gets really tricky and dicey until maybe midterms. So like August, September, coming into midterms 2026, that would be the next big shift of, is everything that we're doing right now with Trump and the agenda and who's going to be our next Fed chair and blah, blah, blah. Yeah. All the midterm policy stuff would maybe go from pendulum right to pendulum left. And, everything will happen with tariffs. If we, all of a sudden, if the Supreme Court decides that what we've done with tariffs needs to go through Congress and we lose half the revenue, maybe that's disruptive. Maybe that's a bad thing for the U.S., but good for the global economy. But look, man, China's spending money, Eurozone spending money, U.S. is spending money, market liquidity and money supply is growing and increasing. We're still looking for the money to stay in the system. And until we have like a big deleveraging event, this is like all the what is it? The high tide raises all ships. I mean, we've got global PMIs on the rise, global yields on the rise. It's like things have to progress higher. Inflation is sticky and still rising a little bit. The best way to combat inflation is to be an investor and to be an owner of assets. And one way you can express that is owning, shares and equities in the market. So they're likely going to go higher. I think having ownership in indexes or ownership in stocks, obviously stock to stock, you could have, sector risk or concentration risk. I think that overall the markets and indexes will be stable. I also think that gold, which has been outperforming everything this year, gold is actually outperforming Bitcoin this year. Gold is actually outperforming the equities this year. Gold is great, and silver has been great as well. I think Bitcoin's still a good diversifier as well. So all these things are good, man.
Who would have thought heavy gold could rise faster than pretend Bitcoin?
Yeah, I mean, Peter Schiff is probably the only guy that's sitting there celebrating gold, because he's been, basically crapping on Bitcoin for years and saying that gold's the only thing that matters, and he's finally right for once.
Finally right. Well, I mean, Bitcoin has mattered to a lot of people, but
it's still up 30% for the year. I mean, don't crap on Bitcoin when and I've said this from day one. I've been in Bitcoin since like 2017. And I've taken some risk capital and I've turned it into some good gains, and I've gotten out of it as a trader, and I've gotten back in since the invention of these ETFs. So I'm in IBIT and FBTC and some other ones. I play MicroStrategy a little bit. I'm a trader. And I think if there's opportunities to make money using Bitcoin or correlated assets to Bitcoin, I'm going to be a trader, and I'm looking for asymmetry. I'm looking for opportunity. I'm looking for reward to risk, just like anything else. So I think the whole idea is you might not understand it, but if the appreciation continues to happen, meaning the spot price and the gamification of, you've got BlackRock, one of the biggest asset holders in the world, has an ETF that correlates with the spot price of Bitcoin. It's in their best interest for Bitcoin to continue to be a stable asset. And we have about $2 trillion in market cap on Bitcoin. What if the market cap grows to 5? What if the market cap goes to 10? We have a bond market that's $40 trillion, David. What if people want to decide that bonds are actually more risky than what they think? And so let's say $5 trillion peel off of bonds and go to something else. Maybe they go into equities. Maybe they go into riskier assets. Maybe they go to gold and silver and Bitcoin. I don't think that wouldn't be a surprise to me at all.
Yeah, that would be crazy for the bond market, but yeah, you'd see
it would be, and I think that'd be like one of the bigger like red flags, and maybe one of the bigger outlier events this year is having the U.S. bond market really have a lot of trouble and a lot of volatility. I think
what's that going to do to the dollar?
Probably tank it. I mean, the dollar would probably be in a secular bear market. The dollar's had one of the worst starts in the last 50 years. It sounds like, 8%, 9%. It's one of the worst starts ever in like 50 years. However, it's still sitting near like the top 10 percentile of all time highs. So, I mean, the dollar being so bad, it's like, okay, so what's the dollar index going to give us? The dollar index maybe slides down to, 90 as a round number, 86 as a round number. Look, if the dollar gets weaker, it's still good for the global economy. It's better for trade. It might suck to be a U.S. holder of dollars and have lots of purchasing power, but if it's being made up for with gains and assets elsewhere, I mean, here's one really interesting thing if you think about your investments. If you own gold and gold has gone up in value, what's your home worth now if you bought it in gold? It takes less gold to buy a house now. If you have U.S. dollars, it takes a crap load more U.S. dollars to buy a home now. So I mean, the asset wise, if you have something that appreciates like your stock portfolio or like your gold portfolio or like Bitcoin portfolio, you think of investable assets that are actually appreciating, things actually get cheaper. That's the world of deflation. That would be nice and favorable for everybody. But instead, our dollars get weaker and everything just looks like it's more expensive because our US dollars go less. They don't go as far with the lack of purchasing power. So just think about it like we have to invest. We have to invest.
It goes from being, sometimes we think of it as like haves and have nots, but then it really depends on what it is you have and how it appreciates.
For sure. Yeah. And look, the income disparity and the income inequality has continued to grow exponentially wider over the years. And I mean, my trading career began in 2000. So I'm 25 years into this. And I have seen that, if I could go back in hindsight and just buy every dip that we all knew and the worst times and the worst times of .com and great financial crisis, I mean, generational wealth has been made in the worst of times. And so even as doomsday and as nasty as things sound and may seem on paper, as sentiment is so wrong right now, like the AAII sentiment has been so freaking bearish all year, and they still haven't turned the corner because it's just people that are upset. It's just people that are annoyed. It's people that are frustrated and worried. I get it, but sentiment is not reality, right? The market that we're trading that's going up to all-time highs is not always rational. And it doesn't have to be rational. And there is a famous saying from John Maynard Keynes that says the markets can remain irrational longer than traders can remain solvent. So anyone that's a perma bear out there is just sitting in their ivory tower saying it's a recession, the market's going to pop, it's a bubble. Right. And they can say it for 5 to 10 straight years and be dead wrong. But they get it right once and be like, I told you so.
Sure.
But they're losing
if
along
you
the way.
Saying the world's going to end tomorrow, eventually you'll be right.
Right. I mean, this chicken little, right? So, but it's just exhausting, man. It's so noisy, and it's like I get it, but what I'm doing is like, look, I am cautiously bullish in this market. We have gone to levels reflexively from the April bottoms. I mean, we've ripped up 30% to all-time highs, and it's like this market refuses to go down. And now with all of the drama between Trump and Powell and the Fed and what's going to happen, and we have terrible jobs numbers. We wiped away 900,000 jobs in this latest revision. Yeah. Okay, but it's not a firing problem. It's a hiring problem. We're not hiring people, but we're not firing people. Like this isn't just slipping into a deep, dark, nasty recession. This is people are looking to the future. AI is coming, and AI is coming for white collar jobs, and AI is coming for a lot of blue collar jobs too. It's like, but nobody knows what it looks like right now. You know, if you have a job, keep it. If you're looking for another job, try to find a better job. But I don't think we're all fired tomorrow. I don't think the world is ready for universal basic income. Like, there are a lot of real changes that have to happen, and no government is going to let their entire citizen and population just turn to poor. Like, nobody's going to be poor and broke all of a sudden. It's like, I think ultimately, if this whole thing happens where AI is the future, if you're an investor, you're going to go into one of the greatest bubbles in the world. You know, I mean, you think about what the dot-com bubble did when everything that put .com to the name was up hundreds and hundreds of percent. If we do something similar to that right now, where AI is the future and all these, you know, profit margins just soar, what's the government going to do? Probably tax the living crap out of every company that's successful, you know, and all that tax money is going to have to go
regulating it and take the bottom out from under it.
Who knows, man? I mean, again, it's like every time the government gets involved in something, it makes it worse.
Yeah.
So if the government gets involved in healthcare, it's more of a mess. If government gets involved in housing, it's a mess. If government gets involved in the market, it should be a mess. Like, the markets, free markets and capitalism should be, let the markets be the markets. And honestly, I had a lot to talk about that today. And just, market makers are some of the most sophisticated bodies in the world. They have been doing this stuff since 1973. 52 years of being a market maker. They've just continued to evolve and get better and faster. And this is a way to be on the winning team. So this is what I do on a daily basis. I think this is what we do to learn how to trade the options market. And we become, you know, basically, as I was using this in a class earlier today, I said, if you could be on the U.S. basketball all-star team and you're playing with Kevin Durant and LeBron James and Steph Curry and all these all-stars and future Hall of Famers, and you're the water boy, you can still maybe get a piece of that gold medal by winning the gold medal. And the market makers do that every single day, every single week, every single month, every single year. That's their job. You know, their job is to be delta neutral. Their job is to be, you know, on the right side of risk and make sure they're managing flows and providing liquidity and stability and efficiency in the markets. So it's crazy when you think about what the market intricacies are, but it's amazing when you align with that power, that force. Just let them do their job, and we can benefit from that every single day.
That's some good insight, and I appreciate you going through all that. If you're ready, I can bring the screen share on, and
Sure.
we can get into the lesson for today. So, folks, know we're not going to have any live trading today with Nathan and Graham out. Chris is going to go over some of those topics that I mentioned at the top of the session here, and it's going to be all educational for today.
Sure.
And of course, now, you know, they're still doing their program. So, like, if you're still on overnight options or whatever, like, there should still be a trade out for that. But we're not going to do any actual live trading in closing playbook today.
Sure. And just so you know, I mean, I do trade a lot. You know, today, I think yesterday I did 40 trades. Today I'm in for 7. I canceled a couple trades, so that's on me. I trade every single day with some of my services. So if anybody's interested in joining me for any live session every single day, I do have a daily profit plan room that I run every morning at 9 a.m. So we're live Monday, Tuesday, Wednesday, Thursday, and Friday. Some of my services, again, I'm not here to sit and sell and poach. It's like, you're in good hands with Graham and Nate. I'm saying that I'm out here grinding every single day, managing capital and trying to make some money, and have some really successful services where, you know, one course in particular, we've had over 400 trades in the last year with a 90% win rate. And we make money almost every single day. I'll show you some interesting stats here. This is that said service. It's called Daily Profit Play. I went out for 820 trades in the last 3 years. Since the advent of zero DTE, which was in summer of 2022, my core strategy produced over $17,000 in just a one contract trade. Now, I entertained my crowd this week and said, okay, I'm going to do some tweaks with the risk. If you're willing to take a second contract after you lose a trade, you can jump that 17K to almost 20,000. If you're willing to step up on a loser, then take a third trade, and you're willing to step that up to a third contract, you make about $20,383. And if you're willing to go full martingale, which I do not recommend, you're making about 21K, which is around 4K more. I think this is a crazy amount of risk to consider. But what's nuts, and this is a crazy statistic, 3 years of trading, 820 trades. I want somebody to guess in the room, how many losing trades in a row did we take in 820 trades? Losing trades in a row. Anybody guess? Let me see it in the chat. I've got YouTube running. I'm on Twitter. I've got the chat here for WisePub as well. I know there's going to be some lag there, David, but David, you answer. What do you think? What's the biggest losing streak I had in 820 trades?
I'm going to say 4 in a row.
2.
2.
2 in a row. That's the
Wow.
worst. That's the worst losing streak I took in 820
I
trades.
thought 4 was aggressive. I thought maybe I was going to make you look bad when I said 4 and you said 6 or whatever, but
Nope.
2.
2.
Wow.
2 in a row. 2 in a row. So again, I take all these trades with the intention of I should win. This is proof of what market makers do so well every single day. So this is why I wanted to talk about this trade like a market maker. Okay. Just a little history lesson here. Market makers are responsible for maintaining liquidity, facilitating trading inefficiencies in the market, right? They're essentially setting bid-ask prices. They're providing liquidity. They're taking lots of trades. They're controlling order flows. And they have been at this since 1973. Okay. Literally daily expirations. Okay. Today, tomorrow, the entire week, every single day, daily expected moves, weekly expected moves, monthly expected moves, quarterly expected moves, yearly expected moves. Market makers do this stuff every single day, every single week, month, quarter, and year. And they also make all the necessary adjustments through those durations. So if I'm going out next year to trade an asset, market makers have priced out based on this current volatility what that asset should be likely doing over the course of that time. This is why market makers do very well. Option selling maintains an edge when it comes to this. This is the magical phrase. The expected move is oftentimes greater than the actual move. And that means that when you come into the market day in, day out, here's an example. Today, David, we opened up at 65.49 or 65.50 on the SPX. Right now, we are at 65.32. We've only moved 18 points for the day as far as opening bell to closing bell. The plus or minus on the day was about 24. Have market makers succeeded through all but 8 minutes left in the entire trading day? Have they succeeded in keeping prices within the expected move today? Yes. They do this stuff every single day. Okay. They are also the most sophisticated models and algos and quants in the world. If they're maintaining a delta neutral portfolio, their job is to mitigate risk. Like I said before, they're balancing buy and sell orders and managing all the exposure every single day. Okay. Now, here's where traders can utilize this information. Market maker moves. You can see a lot of this in your broker platform every single day. Okay. I have a couple of screenshots here that I get to, but between the market maker move and implied volatility, all this means is they set a price point that is a plus minus that they expect the asset to move or stay within. Their job is essentially, if the SPX is going to move 30 points today, they're likely selling calls above and selling puts below, and price is going to stay in that range, and they want to control it. Those are the guardrails that I talked about. Okay. They want to keep prices within those ranges. Now, implied volatility is indicating the expected price range of the options expiration. So, example, tomorrow we have CPI news coming out at 8:30 a.m. Last week we had non-farm payroll. The week before that we had Jackson Hole. We've had all sorts of wild and crazy news events that a lot of times the markets are pricing in. There's rarely a single day that goes by that the market makers are surprised. Okay. Case in point, do you remember this was a couple months ago, David, when Donald Trump said, "I'm thinking about firing Jerome Powell"? You remember what the market did?
Yeah, absolutely.
In 60 minutes, the market sold off 0.7%. And 60 minutes later, it was right back where it started. Market makers know this stuff. So even a surprise move like that is still instant liquidity, instant defense, and they defend those highs and lows for the day. So it takes a big move, or it takes like a whole massive effort to have the market basically surprise market makers on a day-to-day basis. And usually if they do surprise, they're going to hedge, they're going to roll that risk over to the next day or two, and they're going to go back and do their job and play those defense levels day in and day out. So understanding market maker moves every single day allows us to evaluate risk. What do we expect price to do today? Is it going to go up 50 to 100 points, or is it going to be within like a 20 to 30 point range? Okay. So larger market maker moves you'll see in your broker platform. You're going to see this during big events. Next week in FOMC, I promise you we're going to have a much higher implied volatility and a much higher market maker move expected. And it's all coming after 2 p.m. Usually FOMC is a big mover. It's from 2 p.m. to 4 p.m. where we have the rate decision, which is highly anticipated. The Fed's going to be cutting rates next week. And then you have Jerome Powell speaking at 2:30 for a press conference. Jackson Hole is always a wild and crazy event. It shouldn't be, but the market just jumped. I mean, the market moved at 10 o'clock on the dot. And I mean, Powell literally said like nothing.
Yeah,
But the
it
market
moved
was just
before
like
they even
good.
announced
It was
anything.
already,
Yeah,
it
it
was
was
like a
just like, oh
predetermined
well,
move.
there's the meeting. It started, so
Pretty
let's
much.
let's sell off.
Yeah, you could tell it was already ready to rock and roll on Jackson
Yeah,
Hole. And the non-farm payroll, same thing last week. We broke to all-time highs and we dumped for the entire morning. So anyway, market makers adjust option prices based on prop models. They have some of the most sophisticated stuff, algos, quant stuff that you and I would never be able to do. I was at a conference last fall with this guy that used to work for a high frequency firm. The presentation he did was mind blowing. I'm like, this guy is wicked smart. And I'm like, he was at a firm that was taking like 10 to 20,000 trades a day,
wow.
because it was the HFT firm. It's like, look, man, I just want to be like the market makers. I just want to sell some premium, collect some profits, and do my little, do my little option dance in the morning. Okay. So market maker moves usually widen out ahead of significant events. So, major earnings reports on individual stocks, major US news, like we talked about, non-farm payroll, FOMC, CPI data, GDP, anything geopolitically. I mean, we had a Israeli airstrike this week. We had one earlier this year. We had a conflict in the Middle East that was all of a sudden a ceasefire, and all of a sudden the market went up. And then we have trade war going on in April, and all of a sudden that changed because we paused. It's like all this stuff. This is what market makers have been doing for over 50 years. So nothing is different, David. Nothing is different. It rhymes, right? It's not history repeating, but it rhymes. So all the expansions, all the contractions, all the booms, all the busts, it's all getting priced in these markets. And options have been more and more popular, more and more volume, more and more expirations, more and more nominal values. It's all happening every single month. They're not going away. Like, options have really been this key component to markets moving. And option flows are a big piece of that. So, what are we looking for here? I mean, why do I use market maker moves? Because I don't want to overpay for long options. I don't want to sit here and buy a call on NVIDIA when the expected move is $20 and the broker's saying, if you want to buy NVIDIA, you're going to pay $25 for that call option. That's a ripoff. The likelihood of it moving over $25 is slim none. You get some outliers. If anybody traded Oracle, Oracle was a crazy mover overnight. Look at this thing. Okay. I literally priced this out. Somebody asked me a question on this Monday, or maybe yesterday in the live session. Market maker move showing a 21.07. Okay. 21.07. I calculated based on the last 15 earnings reports that I'm showing about a $28 move. Oracle went up $103. Okay. That is the market makers getting their butts kicked, but also probably hedging or having no exposure to a crazy outlier move like that because it's an earnings report. So if you're long the option, that's the one time you can celebrate. Oh my gosh, I killed it. I made so much money on Oracle. Yeah, because that happened. But what happened if you sold on NVIDIA? It's still in the exact middle that it started. Guess where earnings were on NVIDIA? They were right here. And guess where price is at a couple weeks later? It's right there. That's usually what the market does. So in the rare case that you're like, I mean, if you see this on Twitter, how many people are shouting like, look at all this money I made in Oracle? Well, they got lucky because the market did something 5 times what it shouldn't have done, which is insane. So the market throws you a bone every now and then, but that's usually not the case. That's not the norm. So I don't want to overpay for long options. And I certainly like taking advantage of higher premiums and going further out of the money when this magical phrase happens. Expected move is greater than the actual. That's how market makers typically make their fortunes. They're very good at what they do. Okay. So couple of screenshots here. This is inside my Tasty platform. I'll just show you live. Here's my Tasty platform here. If I let's go to tomorrow's expiration, since we're only 1 minute away from the close today. Tomorrow's expiration is going to be September 11th. And so I'll go into the font to make it a little bit larger so people can see it. All right. Type in where I that if you can see my screen pretty well. You can see September 11th right here, 1 day expiration. And the plus minus is we have a 13.4% implied volatility and a plus 33.45. So a plus or minus 33 on the day, which means if I were to take the trade right now at the closing bell, the market's expected to move about 33 to 34 points tomorrow. So that means upwards of, we'll put this up to like 35. Upwards to about 65, 70, 65, 68, or down to about 6,500. That's kind of the high or the low for tomorrow. Based on CPI, we could have a gap higher, gap lower. I don't know. It doesn't really matter to me. But this is what the market makers are anticipating for tomorrow's day-to-day price action. Okay. So you can find this on your broker platform. Here's my option chain on Tasty Trade. I have my asset right here. I have my expirations, where if you follow my mouse here, these are all my expirations. So I go to tomorrow. I can see my strike prices in here. Okay. I'll move this up a little bit. See all my strike prices in here. Okay. And then I can see my plus or minus. Now, what's interesting is going into tomorrow, plus or minus about 35 points. If I go into my Thinkorswim account, here's Thinkorswim. Thinkorswim, go to the options chain. Here's SPX. Let's go to the 11th, which is tomorrow. Okay. I know the font's a lot smaller here, but the SPX trade for tomorrow on Thinkorswim is showing a plus minus 41.23. So that could be as high as 65.73 or as low as 64.90. Is one broker better than the other? I'm actually pretty surprised that Tasty versus Thinkorswim. I don't know if anybody knows this, but 13 years ago, the team at Tasty Trade, Tom Sosnoff, Scott Sheridan, all those guys built Thinkorswim 13 years ago. And then they sold it for $1 billion. And now they did Tasty Trade. That's leaner, meaner, faster, more trader friendly, way better option platform, in my opinion. Just because as a trader, I don't need a learning curve to figure out how to use it. But Thinkorswim is a great platform. It's just a little bit intimidating when you see all these things moving at one time, and it's hard to navigate at first. So it's annoying to like go through a couple tutorials and learn how to use it. Point is, plus or minus 41 points is what I'm paying attention to tomorrow. So between Tasty at plus 35, Thinkorswim plus 41, I'm thinking to myself that if I can go about 45 to 50 points higher, 45 to 50 points lower, there's a pretty good chance I can make a high probability trade for tomorrow. Type in a wire yes, so that makes sense. I know I'm talking fast here, but we've got market makers showing $35 plus or minus, or $41 plus or minus. So if I can sell something that's $45 or $50 higher, $45 or $50 lower, there's a good chance that my range will be respected. Okay. And that is what I'd be doing to align myself with market makers for tomorrow. So here is Tasty. Here is Thinkorswim Web. I just showed you Thinkorswim Desktop. Here is schwab.com with the IV. Here is one of my indicators that I use. This is my daily profit play indicator that starts me out with the close of the day. And then we calculate out based on current volatility where my high and low probabilities are. We're likely not going to see prices going too much higher than my guardrails. So this guardrail, I'll do this horizontally. So this guardrail, this guardrail, this guardrail, and then out here, this top zone, I'll kind of box this in. Let me put a yellow highlighter. Okay, this area up here is basically like the outlier move. I don't think we're going to get price moving into this zone very frequently. In fact, if it is, I'm oftentimes always looking to fade that high or buy the bounce off those lows. Hardly ever does price hit those levels. So if I'm paying attention to this stuff, I know really good key levels with a high probability to sell high and a high probability to buy low, okay, or bounce low. But guardrails wise, we should see the market probably staying within that 35 to 40 point move by tomorrow. News in the morning, market's going to have gaps, most likely. Are we going to react and have all-time highs again? Maybe, but is it going to be sustained? We'll see and find out. So that's one way. I have this indicator here also on Thinkorswim, and I want to do some strategy review. So I know it's closing bell. Look, this might be strategies that some of you are familiar with. Maybe some of you are not. But basically, here's what I say. I am happy to teach anybody how to trade the markets and how to think about whatever you want to accomplish in the market. You can do it with options. Seriously. If you want to be bearish in the market, I can teach you an option strategy. If you want to be bullish in the market, I'll teach you an option strategy. I'll teach you the option strategy so you know exactly what you're risking, exactly what your reward is. I'll teach you the option strategy for something that's neutral. You don't want to have markets go either direction. You don't care what directions market go. I'll teach you that strategy too. So these are directional strategies. Okay. Now, what I think is silly about options are the silly names: long calls, long puts, debit spreads, credit spreads, bear put, bull call, blah, 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 jade lizards, reverse iron condors, ratio spreads. Doesn't matter. They have the dumbest names. Okay. But what matters is, what are you doing with your call options, with your put options, with your debits, with your credits in order to create that trade? Okay. So David, I want to ask you this. You're on the session with me. Let's do a trade. Like let's talk through a trade for a second. What do you think you want to do? Let's talk S&P. So maybe the SPY, maybe the SPX. What would you like to do on something like SPY or SPX?
Yeah, so I think they are used to spreads here. They're
Okay,
primarily used to two-leg spreads
cool.
from Graham and Nate, but they do occasionally do four-leg. Nate's been talking about box trades for a while. So if we look at where you were talking about where it might go 35 up, might go 35 down, if we make it maybe 50 on either end and we keep it within that range, then we
Yep.
know market makers are going to bounce it back toward our box if it starts to go past. I would think something like that would probably be in line with what you're saying and what they're used to.
Okay. So what do you want to do then? You want to set up like that box trade? You want to set up where you're kind of like capping the upside, capping the downside?
Yeah, I think so. Yeah.
Okay. So let's talk about that. If we come into trading tomorrow, let's just say that tomorrow morning, let's make the numbers pretty simple. So it's an easy example here. We know, and follow my text here. So we know market maker move. So market maker move MMM. I don't want to abbreviate if you don't know it. So we'll do market maker move at a plus minus. So I've got 35 on my Tasty Trade account,
right,
and I've got 41 on Thinkorswim. So I'd say we can safely say to be on the safer side, like 40 points, plus or minus 40 points. Okay. So there's our market maker move at 35 to 40 points. We'll just say 40. Now price closed today at 65.32. Let's assume, okay, let's say that price opens tomorrow at 65.35. Okay. So we're going to say that price opens at 65.35. David wants to put in a box trade. Okay. Which means if you're trying to align yourself with a market maker, you can sell up here and you can sell down here, which means I'm trying to collect a credit on the upside and the downside and see if price just stays within that range. Fair enough. So let's go out. I think on the safe side, David, maybe we go out about 50 points.
Yeah.
Okay. So let's sell a 6585 call. And then below that, let's sell a 6485 put. So we're going about 50 points either direction. Make sure my math is right there. It is, right?
64.35. No. Oh, wait. Sorry.
No. So we're going 65.35 minus 50 should be 64.85.
Oh,
that's correct. And then the top one should be, it should be 65. Yeah, 65. You're right. That's what I thought. Okay. So we've got a plus minus 40 points based on the market makers. We're going to go 50 points and see if we can be correct on this trade. Okay. So if we do that, let's go ahead and just set some levels. If we go 65.85 right here, and we go 64.85 down here. Okay. And what do we say? We're assuming that price is going to open around 65.35 tomorrow. Now, if you look at this price action, if market makers do their job, price can go, gapping higher or opening here, then moving higher. I mean, we can move back up to all-time highs tomorrow and then move back down. We can fall on a nasty inflation report and then bounce back up. Price can do all sorts of ways. It can be an infinite amount of nuances, but the end of the day, here's what matters. Did market makers defend this high and did they defend this low? If they did that, we're on the right side of the market. We're trading with the market makers. We're likely going to make some good profit. Okay. On top of that, it's rare that you see a range like this with the expected move, and it's rare that you see prices going way higher or lower than some of these ATR levels, which is average trading range. It's also rare that we see markets go way higher than what the VIX is showing us on a day-to-day basis. This is my VIX volatility index. We're trading at a 15.39 VIX. I'm going to give you can read about this if you want. I'll teach you this every day in the daily profit play, but 15.39, okay, 15.39 divided by 16. The biggest move that I would expect tomorrow, David, would be a plus or minus 0.96% one way or the other. That's about as much money based on the current volatility environment, based on what the market could give us on a day-to-day basis. If the expected is greater than the actual, we should not see price exceed 0.96%. If all goes well.
How do you what's the right word? Reconcile that with, we're talking 50 in either direction, 1% more like 65, correct? So
right. So what I'm looking at is I know that let me measure it this way. So if we go out here, okay, let's say we open at 65.35 and we're doing market maker moves. So that's allowing the market to have a plus move about 0.77 and a plus move about 0.75 to 0.77, give or take, right? So if I wanted to say, I'm going to put in another boundary, let's go 0.96%. 0.96% puts us up to around 64, 64.94. Okay. So
65.94.
65.94. Yeah. So we'll put a box up there, and then we'll go down 0.96, down 0.96. And we're talking down here around 64.70. So there. So just with a little simple math and using the VIX and using the market maker move, I shouldn't see prices going beyond these levels tomorrow. And if I like to sell premium, if I like to collect income and collect credit, what would serve me best is either one, I take a trade that's neutral based on I sell up here and I sell down here and I get a neutral position, or I let price come up a little bit higher and I still plan on selling the highs at a better credit, so my reward to risk is more favorable. So again, and I don't want this to be too advanced. If this is a little bit over the head of some traders, it's okay. I literally teach this stuff every single day. But if we waited for the market to go up like 20, 30 points, rather than taking on a higher risk, I can probably take a trade here that I risk maybe, $4 to make $1. I risk, maybe $2.50 to make $2.50. There's all sorts of trades we can take where, based on where prices can go, I don't think prices go too much higher than these levels or too much lower than these levels. And if I wanted to get better price action, if price falls and I want to sell some puts down here, there's a good chance I can get a much better credit and take on much less risk. Okay. So that's one way to think about this as far as trading like a market maker. Their job is to cap the upside, cap the downside, keep markets within ranges. And this is kind of a fun example. I go back to this workspace here, and I'll show you what I've done with my daily profit play room. I can go back and number one, show you that we've taken a lot of live trades and we've got a lot of winners. So I've got some open positions, which is why this isn't filled in. But look at all the green versus red. A lot of green, couple losses, lot of green, couple losses, lot of green, a loss, lot of green, small loss, lot of green, small loss, lot of green, small loss, blah, 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 blah. Lots. And this is what I'm saying. The biggest losing streak was 2. Okay. 2, 2, 2, 2, 2. Lots of winners, lots of winners. That's what it's like. Aligning yourself with the market maker. That's what it's like every single day. You mostly win. We have 89.2% winners with over 400 winning trades closed out. We do this trade every single day. So if I did this for, I'm trying to think what indicator. I was going to just go back and kind of show you. Look, markets can do all sorts of stuff. I'll go back here. I've got some data points that run back about 20, 30 trades. I can show you I take this stuff every single day. I can show you right here. This trade right out of the gate, this is a winning day. Okay. This trade goes up and goes sideways. That's a win there if you're out of the money far enough. Otherwise, it was going to push your highs. You might have taken a small loss there. This day, down and back up, it's a win. This day is choppy. That's a win. This day goes down. That's a loss. This day is a win. And I'll just keep going because you're going to see very few losing days. Winner day, winning day, winning day, winning day, winning day, winning day, winning day, down then back up, winning day, sideways, winning day. This one was Jackson Hole. This was nearly impossible. If you traded market neutral, you got absolutely toasted. I lost $800 that day, and I got it back later in the day. I won $300 there, and the next day I won $500. I got myself paid back in 2 days. I don't always like to do that. I don't like to go like super aggressive on the next couple of days, but I was pretty sure that the inefficiency of that Jackson Hole was going to come back and pay us. So anyway, I lost Jackson Hole day, got back at the end with a little bit of mitigation, like risk mitigation, and then I won, and then I won, and then I won, and then I won, and even here I won, and over here I won. And that's the point. Is like one losing day does not define this strategy. One losing day does not do anything against me where it's like, I quit, I can't do this, I took a loss. No, you keep trading through it. You look at a trade like this, look at all these wins. You piece together like 10, 15, 20 wins in a row with one small loss here and there. It's like, it's manageable. You look at this for 800 some trades. You get win streaks of like 16 winners in a row, 45 winners in a row, 25 winners in a row. Yeah, you have the occasional loss, but we keep trading through it. So anyway, it's a lot of fun, and it's the same thing every day. It's not, it doesn't have to be overcomplicated. You don't have to overthink the market, overanalyze the market. What about the news? What about this? Let market makers do that stuff. That's their job. All we have to do is take the trade. We understand the risk, understand the reward, and place the trade and walk away. This is a set it and forget it type strategy. And most of the time we walk away with a winner. So,
and you're out the same day. Uh,
All the
so
same day. All same day.
yeah,
Yeah.
so just to kind of bring that into a scope for people who are used to some of the programs that Nate and Graham do. So, for example, they're used to seeing spreads on SPY placed toward the end of the day in
Mhm.
Nate's overnight options program, like we had today. This is different from that because that's a one DTE trade where he's placing it at the end of the day today, and it's going to expire tomorrow. He's basically playing tomorrow. What
Correct.
Chris just demonstrated is an example of a play for tomorrow, but he's not going to take it today. He's going to see what happens in the morning. He's going to take it in the morning. So he talked about, well, let's for example, let's say if it opens, $2 more than what it closed at today, but he's going to wait till tomorrow, see what it actually opens at, see what the
Correct.
actual money market maker move is, and base it on the actual market maker move for tomorrow. Place a zero DTE, a same day expiration trade tomorrow, and automatically have to be out of it by the end of the day. So it's more like Graham's 60 minutes than something where we're looking at it at this time in closing playbook, to get in it now for tomorrow. We're actually getting in it the day of and riding it for the day.
Yeah, and it's not even right in for the day. In all honesty, I get in these trades usually right around opening bell, so like 9:32 in the morning, 9:35 in the morning, and I'm usually out by, like, today was textbook daily profit play. We were 2 for 2 by 11 a.m. So we got in around 9:30 to 9:35. We were out by 10:53. I was actually in the middle of a session when I hit my second take profit. So I'm not planning on holding these trades all day, but it also is risk defined. So if I did walk away from my computer, I know that the most I can lose is X, the most I can win is Y, and the broker closed me out automatically. And I don't have to sit here and micromanage my trades. I just set the trades up and let the market makers do their job. And today, like plus minus on the day, look at this is what's impressive. We open up here at 65.50. We close at 65.32. That's only an 18-point move on the day. The brokers had a plus minus 22 to 24 on the day. They did their job. And the markets were up and they were down and they still settled in within that range. Yesterday, same thing, plus or minus 20. It went from 65.02 to a close at 13. A 11-point move on the day, a 9-point move on the day total. So from opening bell to closing bell, 9 points, brokers expected a 20 to 25-point range. Winner, right? Over here, literally nothing. It opened at 64.96. It closed at 64.96. The market went 0 points for the day. Okay. So that's what's great about what this market does. And, I'm trying to make the trade really simple. I saw somebody typing in, like, how do you pick direction? I don't have to pick direction. I don't care about direction at all. In fact, all I want to do is see if the market can respect the guardrails that the market maker set based on those expected moves.
Yeah.
So I don't have to pick direction ever.
Yeah. Sorry.
No, you're good.
Yeah. So
That's
another
nice.
another difference, right, in some of those trades. So if you take an overnight options trade, that's directional. He's expecting that to go in a particular direction. It's gotta expire, or you got to get out of it while it's above the line in the sand or below the line in the sand. In this case, this is more like a two-way trade where you're trading a spread for the top and you're trading a spread for the bottom.
Correct. Yep. And like I said, if you can dream it in the market, you can do it with options. I mean, I'm trying to think, like, you have some like wild and crazy stock that you want to follow, or you like chasing some meme stuff right now? You a fart coin guy?
No,
Like,
did you see Octo the other day? This crazy up, like, 4,000%.
I mean,
look at this nonsense.
yeah, it's up 400% in one day. So,
Yeah.
I mean, I see it. It's like, but did I know about it? Was it on my radar? Nope.
Yeah, no,
Never
it
touched
wasn't
it.
on anybody's radar except the
Yeah.
guy that put like $1.5 billion into it or
Sure.
whatever.
And then
It was on his radar.
was this Tom Lee? Is this Tom Lee's thing?
I think so. I don't remember the name. It might be.
Yeah. Either way, it's like, yeah. So the guy that pumped it and then the guy that sold it left everyone else at the bag holder chasing it, and then they lost everything. Right. This market literally is back down in 2 days, right where it started. So timing is everything when it comes to this garbage. But it's like, this is what makes people feel so bad about trading. It's like, why didn't I know about Octo? Why couldn't I make 400%? It's like, because it's freaking gambling and nobody knows that this is going to happen. Yeah. I mean, so this is why I spend the time focusing on what can happen. I like trading indexes because if I trade SPX, I get a great tax benefit. It's long-term, short-term split, and I get it cash settled. There's no assignment risk, and it moves every single day. And it's also way less volatile, right? I mean, look, if somebody murders Elon Musk and Tesla drops 30% overnight, the S&P is going to move maybe 1%. It's like, so the haystack in the volume that represents the entire S&P is a lot more stable and resilient than one individual stock. So I really don't love throwing all my trades in individual stocks, because if you're going after like, this gamble and this gamble and this gamble, maybe they work. But I like to align myself with what market makers do. They're the transactional collectors. If you want to buy options, if you want to speculate on direction, what you're going to experience is most of the time the market's not going to move. And it's not going to move fast enough and far enough for you to get the trade you want, get the profits you want. And this is why, and maybe traders have experienced this, but most option buyers, if you just buy a call or buy a put, most option buyers lose money because you don't get the trade to move enough, fast enough, far enough to take profit. And what sucks about buying an option is you can be right on direction and still lose money. That is mind-boggling to me, right? Like I could buy a SPY call and price could go up $5 and I don't make any money, David, because the expected move was $5 and I needed to cover that cost. So I lose. And it's like, that's not fair. How is it? I get the direction right, but I just didn't get the right time. I didn't go out far enough. And it's stuff like that where I'm like, 70+% of options will expire worthless. Most of the time, it's like you're not going to make money. So I'm flipping that. I want to be on the transactional side with market makers. I want to trade with what the markets are doing with some of the most sophisticated models in the world and just let the markets be the markets. It's rare that we see nowadays with all the efficiencies in the markets. It's rare we see the market giving us these crazy big, 2% swings. If we're going to see a big, crazy 2% swing, guess where the VIX is going to be? A lot higher than 15. The VIX is going to have to be at like 25, 30, 35 for us to get big swings like that. Write this down. Rule of 16. If the VIX is trading at 25, okay, if the VIX is at 25 divided by 16, we can expect about a 1.5% swing that day. That's a lot of volatility, people. A lot of volatility, right? When the market was moving during Liberation Day and the VIX was up to 60, take a 60 VIX. We're looking at 3 to 4% swings in the day. We saw that crap happen. We saw 9% swings during the day. It's insane. So one day like that, I mean, what's crazy is during the month of April when all this nonsense is going on, I had over 40 winners in like 2 losses during Liberation Day, during the craziness of nobody knew what's going to be said and nobody knows what's going to happen in the markets. We won like 91% of our trades. Yeah, and I never had to pick direction,
Yeah, that's great because that felt like the Wild West.
It was, dude, it was one of the craziest things I've seen since COVID, since 2020. When the markets like couldn't stop going down and then they turned around and couldn't stop going up, it was easily it was equally crazy. And I thought for a moment, I thought we legitimately had systemic risk in the entire market. The U.S. catches a cold because we're putting on a trade war and the whole world catches a flu, and we're watching the markets just dump day after day for 4 straight days until what happens? We literally pivot the entire agenda to something else. We go from austerity to Doge to cutting jobs to cutting the government to draining the swamp to we'll do everything in our power to grow and outpace this inflation, outgrow this inflation. Now we want the Fed on board, and now we want the whole world to align us. We want to trade more, not trade war. It's all that stuff. And it's like, my gosh, man, what a crazy swing in sentiment. But now we just have to figure out how to be in this market. Like you can always go back and trade hindsight, but it doesn't do you any good. You can always wish you did something different. All you can do is control what's in front of you, trade what's in front of you. And if you align yourself with the market maker, you're going to be on the winning team most of the time. I would rather do that and make sure you define good risk, and just have good equity management. And that's the boring stuff. That's the boring stuff that nobody pays attention to, but it's the stuff that saves your hide when you get a bad day like a Jackson Hole or bad day like Liberation Day. One losing day does not define the strategy. One losing day is take it on the chin, go back and trade the next 5, 10, 15, 20 days in a row and win. And you're fine.
Yeah.
So
and
anyway.
People, the cool thing about trading with you is that's going to be built in to the trade recommendation. All of that's behind it in your thought already. They don't have to worry about that. And it's almost bad because they can take it for granted. They can take it for granted and not even realize that all of that's going into the thought process, but it's there. And that's great. So for people, just to kind of cover some of the questions that have been flying by in the chat.
Yeah.
These are going to be basically 4-leg spreads. You can have
that's the easiest way to think about it. Yeah. If you want to look at it like you're going to, look to sell some spreads here, sell some spreads here. You're trying to box the market in. You're trying to, range trade the market for the day. That's what we do. That's what I like to do. But like I said, I teach this. I just did a big masterclass today. It kind of broke it all down for day one. I'm doing another masterclass tomorrow at 1 p.m. We do it every single day, every single morning. You know, we're the buffalo in the storm. We're walking head first into what the market's going to throw at us. We trust that the market makers do their job. Our job is to manage risk. Okay. I have traders in my services that are literally making $500 a day in the strategy, $1,000 to $2,000 a day with the strategy, but there's risk. Okay. I, on average, make about 50 to $100 a day. That's my goal. That's my target. That's comfortable with my risk. And it adds up. It adds up really nicely. So I just like that as my grind. And then I have other ways that I trade more medium term and long term. And I've got all sorts of fancy ways to trade the markets. But the goal is I trade to win. I don't care, man. I don't care what strategy I have to deploy. I want to trade that's going to win. So market makers help. Market makers on a day-to-day basis, they help. And it's nice to never have to pick a direction. Sometimes it can be really frustrating to like call a direction on the day and see price do nothing. You know, sometimes it's like, oh, it's clear the market's going to move today, FOMC, and it doesn't do anything. You know, it's like you wouldn't be surprised how often the market just doesn't move that much, and that's perfect. It's perfect. And a lot of times when it does, it usually is bouncing off these guardrails that I have set already. So when I come into the day, we're very prepared with what levels to be mindful of and what highs and lows to watch, and then we just kind of, you know, massage our trade sizes and massage our risk, and we manage our trades. But I truly, and this is something like I taught my fiance the strategy with Daily Profit Play. If she can get up in the morning, opening bell, okay, and place a trade and walk away for the entire day, she knows exactly what she's going to make if she wins most of the time, which is 90%. And she knows exactly what she'd risk. And if she does this for the next 52 weeks and she's averaging about $50 a day in winners or $100 a day in winners, that's the greatest side hustle in the world. You know, she's been talking to me for months about like, I want to do something on the side or something in the evenings. And I'm like, look, if I just teach you a little strategy, you can make 50 to $100 extra. You have to get another side hustle. You have to, you know, take time away from us with an 8-month-old and all these other things. It's like life is just getting started, man. Life's exciting now. So, you know, we get an 8-month-old and possibly child number 2 on the way. So, yeah, I mean, side hustle is I want to do it from home. I want to be around. I want to be around the family. So it's a lot of fun.
That's great. That's awesome. A handful of people are asking for like an actual example of what you would buy, what you would sell on that spread we were talking about earlier.
Sure. Let's go see if it was this one. I thought I used the text box. Okay, so we'll use an example here. Okay, so I'll go.
It was like 65.85 at the top.
We'll say opening price at 6535.
Yep.
Okay, opening price at 6535. And as an example, I would do a sell call at 6585. And then above that strike, I'd choose my risk. How many of you are comfortable risking $500? Type in a wire me yes if a $500 risk is okay. Okay. And we can throw out bigger numbers. You can scale this thing and you can make this. I'm going to risk 10 grand. I don't care. But if you're comfortable with like $300 to $400 risk, $500 risk, I think we'll be okay. So to do that, David, I'll do this. I'll buy a call at 6590. Okay. On that trade, I can probably collect like 50 to 75 cents credit. Okay. So I'll say that I get like 75 cents credit on this trade. Okay. Now, what I'm going to do is I'm going to take this step further. I'm not worried about the credit yet because all I'm going to do is piece this together where this is my price. This is my call side. And now let's do this. Let's go down here to the put side and I'll do a sell put and I'll go 50 points lower. So that's a 64.85 here. Okay. And then I'll do a buy put at 6480. Okay. So the way that this is put in my broker platform is I find my trade SPX. I find my expiration. Let's say this is for tomorrow morning on the 11th. I sell the 6585 call. I buy the 6590 call. I sell the 6485 put. I buy the 6480 put. Let's say the broker gives me $1.20. Okay. I get $1.20 credit, which means this is a $5 wide spread. Either direction. I don't need a direction here. So I get $1.20 credit, which means 120 is my max profit. Okay. And $3.80 is my max risk, which is the $5 minus the $1.20 credit. Everyone following that math? Okay. So how do I keep $1.20 profit? I need price to stay less than 6585 and greater than 6485 by end of day.
Or.
And or.
Yeah.
Okay. And or.
Yeah.
Yeah. Well, I guess it is and. I mean, you need them both to happen. If it stays below 6585 but goes below 6485, I'm still
oh yeah, you're right. My bad. You're right.
So it has to be and.
Yep.
Yeah.
Yep, you're right.
Semantics.
No, they're important.
Yeah.
They're important.
So, but I want it to stay in the range, right? So I need price to stay in between that range for me to make the full $1.20. Okay. What I do with this trade to increase my edge is I take profit early. Okay. I like 15%, 20%, 25%, and 30% take profit targets. And that means that if I collected $1.20, I'd be pretty happy closing this at like a 80-cent debit. So let's do the math. If I make $40 on the trade, what's 40 out of my risk? If I make 40 out of the 120, I'm pulling in 33% return on that credit. I'm okay with that. I like the 20, 25, 30%. If I do that, I'm increasing my edge. I'm letting time decay work in my favor, and I'm letting market makers grind in the morning like they typically grind. Later in the day, flows start to happen after 11 o'clock when all the London sessions and London sessions and Eurozones are closed. Then it's all US based. And if US flows start to kick in for the afternoon, I don't want to see price going aggressively one way or the other because that's going to threaten my upside or downside. So ideally for me is by 11 a.m. or by 12 noon Eastern time, I'm usually out of this trade with profit. And I just take the trade, set the take profit, walk away. If I lose the day, I know that my max risk is going to be on this particular setup would be $3.80. So if I'm comfortable with $380 risk, I don't have to worry about this risk. It is risk defined. The market could go 10% higher, 10% lower. Trump could come out and say, I murdered Jerome Powell, and the market can drop 5%. I'm still only going to lose $380. It doesn't, it's risk defined. Okay. So if we get comfortable with the risk up front, we know exactly what our trade is for reward and risk, and we just follow the process and mechanics. Okay. So that's an example. That's all I have to do. And this trade can be taken every morning. And I also, I've taken the time in my classroom and the master classes to show, are there better days of the week to trade? Some people, I saw this earlier, I can only trade 3 times a week, Chris. I've got less than 25K in my margin account. Couple things on that. Number one, I've got some pretty good resources at Tasty Trade. Their compliance team has been working very hard with the CBOE and the CME, as well as the SEC. And I'm pretty sure they finally have enough leverage to get the pattern day trading stuff. I think it's all going to change in 2026. I think that pattern day trading will go away. And I say that because think about, you can get on your phone and you can open up a casino app and you can gamble all day long. You can open up Polymarket, Kalshi, DraftKings, you name it. You can gamble your face off, and there's no limited gambling. So if you're trying to trade and invest in the markets, pattern day trading needs to go away. So fortunately, the good team at Tasty Trade has been working on that really hard. And I think by, Q1, Q2, 2026, that's going to change for the better. So I think that's a big win for retail traders. However, the reality is right now, we probably have people that have less than 25K in a margin account, and you're limited to 3 trades a week. Well, literally in the first week of the service that I did, traders said, hey, Chris, I have this account with this broker and this account with this broker, and I take 2 here and 3 here, and I never have pattern day trading problems. Perfect. Easy workaround. Okay. If you trade futures, you can also trade S&P futures. So ES or MES, and you can trade futures options, and you never have to worry about pattern day trading either. So there are some workarounds, right? But like I said, hopefully by early 2026, pattern day trading is no longer a thing. And that's a big win for retail traders. And you can trade as much as you want. Cool.
Absolutely cool. All right, yep. Manny, just to get back for everybody in there in the chat, because Manny had just posted in the Wise Pub chat. So the risk isn't $500. The risk is the $500 minus the $1.20 or $120. So that's going to be $380 because you're getting that credit. You have that credit up front. They can't take it away from you. So when you drop that 500, if it were a total loss, you lose that 500. You already made $1.20 on it or $1.20 on it. So
that's correct.
Really a net loss 380 is your.
That's correct. Yep, exactly. So a good way to think about it. Yeah. So, and again, this is the simple math that we have to do ahead of time, because once you understand this is the most I can risk, this is the most I can make. What's my take profit? What's my probability? I'm winning about 90% of these trades. My probability of making 20, 25, 30% is very, very high. it's 90+%. Okay. If I let the trade go for the day, it's usually up to 93, 94%. Certain days of the week, I like to trade specific days on daily profit play, 95%. We've done the numbers. We've had 3 years of data. I will continue to tweak and refine and modify the strategy to make sure, like, are we getting the best team? Are we getting the market makers to do their job and we can align ourselves with them and make money consistently? Because if I see they're failing left and right, and I feel like every day they're breaking ranges, highs and lows, then I'll tweak the strategy, you know? So we've done that a lot, but honestly, it's so crazy. Like a big gap like this or big gap, like it doesn't matter. Like the market is just so good at just not doing anything outside of staying within the expected move for the day. So I take a lot of, I trade with a lot of confidence that way, knowing that like people are way smarter than I am and way smarter than all of us are and way smarter than us as a retail crowd, but it's their job to do this. It's literally their mandate to do this. And there are trillions and trillions of dollars on the line if they do this wrong. So it is in their best interest and the market's efficiency best interest to do this successfully. And that is why we have mostly winners, very few losers, and we just continue to trade and grind. So there you go. Yeah.
Good stuff.
Yeah,
All right.
man.
For those that are asking more detailed questions about exactly how all this stuff is calculated, it's all in the training. It's all part of the program. You're live tomorrow morning here in Opening Playbook, right, Chris?
Yeah. In fact, I think my schedule is going to be a little off. So I'll start my normal daily profit plan at 9 a.m., but I think I'm jumping in with Graham and Nate at 10. So I will be joining tomorrow morning, and having some fun. I've got some more educational stuff we'll talk about. And, yeah, so I'll be doing both. I'll do my normal show in the morning, and then I should be jumping into Opening Playbook around 10.
Awesome.
So looking forward to that. Yeah.
Yeah. All right. Well, we'll find out tomorrow morning exactly how we can get in on this program. It's something that he does every day. Starts before market open, goes till just after market open, and places those trades first thing in the market day, and talks at length in the recorded trainings and in the live sessions about calculating the volatility, finding where those strike prices are, where are those guardrails, where do we want to set our strikes in relation to the guardrails, all of that. So really cool stuff. And it's all 0 DTE. They're all extremely short-term trades, usually in and out of them in part of a day, or at worst case scenario by the end of the day if you just let it ride. So really cool stuff. Appreciate you being here, Chris.
Can I show one more thing? Do we have like 1 minute?
Please. Yeah.
Okay.
I mean, unless it's going to be like Miss America there. We don't want to see that.
Yeah. Well, that's just what popped up. Here you go. Daily profit play. Okay. So I'm just going to show you the blanket strategy. This is a bit of my optimization. Okay. This is the trade log. But P&L, I mean, you're talking about a grind every single day. We've had some downturns, but for the most part does just fine. Let me go back here. I've got some other tests to show. Let me go back to this guy. Tests, DPP. Okay. Every weekday we grind, and so look, I also slip in a little bit of discretion. Like, I've got a feel for the market. I've got some highs and lows. I've got some expectations. Sometimes I'm directional. Sometimes I'm not. I'm trying to show you that every day, if I just did this, we'd be fine. We're compounding. I mean, this is crazy. You talk, 50K, I don't care what number you put in here, but you're making money year over year. And if you want to increase contracts, you can scale this. I pull in $4, that's my max risk. I pull in 360. It's like, I just hit consistent take profits. I like the 25%er. But if I have a P&L that just goes from bottom left to top right, and it's not going to be a straight line, it's not going to be an everyday winner, but we're going to have a lot more winners than losers. I can say that. And so this is a strategy that we have to be comfortable with risk and expect to win, and just know that we can grind through it. The reason I did the data here is because if I did every trade at one contract, I've made about $17,000 over the last 820 trades. If I was willing to take a second contract after a loss, so I lose one day, I show up the next day and take two contracts, I make almost 20 grand. So I do make a little bit more. Like, that to me is like worth the profit of doing that. Now, if I go to a third or a fourth contract, if I want to like martingale this thing, to me, that type of risk is not worth it. And I had a long discussion. There's a whole article in Wall Street Journal about this trading. It's basically a service, but the guy's been coined Captain Condor. And this guy basically does like a 1, 4, 14, 28, 56, 100 plus contracts. It's not even martingale. It's way more extreme. And he literally says, I'm just one trade away from losing it all. He knows that the strategy is like, if you have 3 or 4 losses in a row, he's screwed. So I'm never going to be that trader. Like, I've been in these markets for 25 years. I'm not going anywhere. The only way I can survive is making sure that risk is important. Got to take care of your risk, because truthfully, think about what this market's done this year. The market was down 20%. We're going to hell in a handbasket. It's going to be a recession. Oh my gosh, it's the end of times. We're up 30+% off those lows. We've got a 10+% year-to-date gain. All we have to do is survive the crazy stuff. Survive the crazy stuff. And this market by design wants to go higher. Let it go higher. Enjoy the fact that it rides higher most of the time. Just make sure you're not doing stupid stuff to over leverage. Retail traders make a ton of money, but they give it all back because they manage risk like idiots. So if you tweak your risk and you manage it a little bit better, more responsibly, you're going to thank yourself by sticking around the next time we have a COVID, the next time we have a Liberation Day, the next time we have a 20% haircut and the market does that out of nowhere. Survive it. You know, that's just my PSA for the day is, if you manage risk, the upside's actually quite easy. I mean, I'm creeping up on 500K for the year. It wasn't because I was crazy aggressive and got lucky on trades. It's because I systematically and mechanically grinded through this market all year. So, but that's my style, man. I mean, maybe it's like, I just need to buy Octo and get lucky on a 400% winner, David. That's maybe what I need to do. Go all in on one trade, right?
Well, I don't know about that. I mean, that's what we definitely try and tell people not to do.
Of course not, because it's stupid and it's not realistic. If you think it works, all you're doing is you're chasing. It's all fake.
I know you're kidding. I just don't even like saying it out loud, because people are gonna like hear one bit of it and be like, "That's what Chris told me to do."
Yeah.
But so tomorrow morning, 9 a.m. That's an open call, right?
Yeah, everybody, look, you're all welcome to join me. I run the session free for everybody at 9 a.m. My daily profit plan. Is it okay if I share a link, David?
Yeah, I was just about to grab it.
Okay.
It's the pro link /daily profit, right?
Yes, there is. There's a way to get in. You can do the link there. Also, I'll just give you one if you want to opt into the direct daily profit play. I'll message this right there.
Yeah, go ahead.
So you can copy paste that link. That'll get you into the session. You can also join my Telegram channel. But yeah, every morning at 9 a.m. I'm live, and this trade kicks off 9:30. The alerts go out to all my members in Telegram. I sprinkle in my other services. So I've got, scanners for my watch list. I've got individual trades. I've got all sorts of other stuff. But again, I like to put them all together and just talking through the markets through the week. The daily profit play is what I'm trading every week or every day. Waterfall income I trade every week on Mondays. Newsbreakers, once we get into earnings season, I'm very active there. Double ups, I've got to get very picky, but I'm only looking at like 10-to-1 reward risk trades. Pinch point scanner is a dashboard that finds awesome opportunities. This is how to hedge your portfolio. This is like my kitchen sink. I can do whatever I want. The most discretionary trading. This is how I manage most of my money. Medium term, long term is Project Options Edge. I'm also willing to do campaign trades and some of the fancier stuff. But again, I'm happy to show anybody anything, because I've done this for a long time. I really think, look, man, I migrated an $8 million currency fund that I managed for a decade successfully. And this was all in Forex. I traded robots. I traded discretionary. I would build positions for 3, 4, 6 months at a time. And I would have these huge wins over the course of 6 to 12 months. I took all that and I put it into trading equities, options, futures, just because when you trade options, everything you do from start to finish, I know my reward, I know my risk, I know my probability. It is a way better trade and a way better concept of managing risk. So my risk adjusted returns over the last 6, 7, 8 years are as good as they've ever been. I survived COVID. I survived the 2022 bear market. I survived Liberation Day. Risk management, it gets so much better with options if you know how to use them. So hopefully that helps.
I'm sure it does. You got your Telegram channel sign up link handy?
Yep. Telegram link coming in 2 shakes of a lamb tail. Give me a sec.
I was just about to go grab it.
Okay. So here is Telegram. I'll post it in our Wise Pub right there. Yeah. And I'll post it in YouTube right there. There it is. So I've got the 2 links here. Join my Telegram or join direct through SMS. You can opt in and then jump in my live sessions. But those links will work. And again, you can always contact us, support@prosperitypub.com. So all good.
No, Sean, these are not covered calls. You don't need to own the stocks because you're doing a spread on either side that cancel each other out.
Yeah. Isn't it nice to know? Here, look, you don't have to pick direction. You don't have to own a stock.
Yeah.
Ever. And you can generate income. That's pretty nice. Every day it's like, if I'm willing to allocate a couple $1,000s for buying power, I can take these trades all day, every day. Never own the asset, never have to pick direction. basically align myself with the all-star team of market makers and let them do their job. Win about 90% of my trades, and I can be literally in the trade in 30 seconds and walk away for the rest of the day. That's how nice it is. Like if you really simplify it, that's how nice this whole strategy is. I sit here from opening bell to closing bell and I grind like, every full-time trader probably does. But as far as, a core strategy, it's pretty nice, pretty simple, pretty repeatable. We can follow a process, right? Cool.
I'm just going to repost these links in here.
Okay.
Because when I post them, they get in there as
you got hyperlinks with them? Okay, cool.
Yeah.
Yep.
I'm special.
Oh, you are special. Look at that.
All right. Anything else?
I think that's it, David. Somebody made a joke earlier. Can you put this on a slower play mode for replay?
Yes,
so
we can.
Maybe there's a half speed that you can watch for me.
There is, but not live. Not live. So if you look under the presentation, if you scroll down on this page, you'll see the announcements section.
Yep.
You'll see the link to the latest opening and closing playbook replays. Give me an hour or so, and this will be uploaded to that replay page, and you can play it back at whatever speed options Vimeo gives you, which is, I think, anywhere from as low as like a half speed up to like double speed or something. Well, now, if you really want to challenge, put Chris on double speed and see if you can follow.
I'll be straight chipmunk there.
Right.
But you know what's funny is, and I think the way this happened is, I'm honestly like a very calm, cool, collected person. I don't really get excited about a lot of things. But I will say, like, this is the weird type of energy that I have into the markets. And also I do listen to a lot of financial podcasts, and usually I do this at the gym or when I'm in my car, like the road trips I have through the week. I listen to almost everything at like 1.25 or 1.5. And I feel like that's become like my language now, is when I listen to something at normal speed, it's like, guys, you're so slow. And so I think I'm just naturally speaking a little bit faster because I'm trying to fill the air with like no dead time. Let's make this like, exciting, entertaining, but also I'm all about education. And I think that, look, I didn't know anything about the markets when I was 18 years old, when I first started this stuff. I didn't know anything until I was, in 2006, 2007, when I first met. I was in the golf business before I became, interested in finance. But I was passively trading in stocks when I was 18, 19. I had an older brother that we started a little investment club. But 2006, 2007, one of my clients in golf, I was an instructor. He was my student. This guy was a full-time currency manager. He managed like a $20 million portfolio, and he showed me a lot of things about trading and leverage and scalping and day trading. And it's like, I was hooked on the idea of, I think I can do this. It's kind of like playing a video game. Let me learn the ins and outs of it. And I was very hooked on Forex for a while. It made me a better stock trader. It made me a better technical analyst. And from that point forward, it's like, I'm going to make as much money as I can to have a nest egg to trade. Don't quit my day job until it's appropriate. And then as I got more and more experienced, I started teaching, trade Forex, because I had a lot of success. I went from a $2,500 account to over 150K in 2 years. That was enough for me to say 150K, preserving capital, making 20, 30, 40% a year, compounding that, started trading for other people, friends and family. And here I am now, almost 5 million under management and just managing for friends and family. I'm a big part of the retirement plan. They kind of need me every single year, but it's my job. And I've signed up with, my job is to make the most money I can, the safest way I know how. And honestly, options has been a much better route to making those safe gains. You have to manage risk. This market is not perfect. It is really, really good a lot of times. But if you are caught off guard by a black swan, if you're caught off guard by an outlier, people can lose everything. I know too many traders last year that lost hundreds of thousands of dollars. Good friends of mine that got blown up during that July to August dip. It was a 10% dip in the index. And I had people that lost 6 figures in a day or two. Why? Because they were over leveraged in futures. It's stuff like that where I'm like, my gosh, like, thankfully I care about my risk that much. Where like, maybe I'm more conservative than others, but I'm just trying to say, like, it's all a process. And I am a base hitter. My wins are small and consistent. I'm never worried about risk because it's always under control, and rarely am I surprised in the market. I'd rather have 10 ways to see things and make sure that we're not surprised. But if we get surprised, let's make sure our trades are under control. We can't risk a ton, and we can always come back to trade tomorrow. Always come back to trade the next day. Always come back to survive and show up the next day. So we got lots of rounds here, David, right? As Mike Tyson says, everyone has a plan to get punched in the mouth. Let's duck and weave and make sure that we're going to survive.
Right. And spread it out over lots of trades.
Lots of trades. Yep, exactly. Cool, man.
All right, man.
Thank you so much. Thanks for having me, everybody. Thanks, David.
Yeah, thank you, Chris. Really appreciate it. Folks, we'll be back tomorrow morning at 10 a.m. But if you want to get some action before that, you can attend Chris's class at 9. Start ducking and weaving, bobbing and weaving, float like a butterfly, sting like a Chris. And and then we'll see you at 10 o'clock for opening playbook. Have a
Sounds
great
good.
rest of your night, guys.
Take care.
Thanks, Chris.